If you're tuning in, thanks for coming back. Any questions you guys have, drop them in the comment section. We'll answer those live. What we're going to go into today is we're going to go a little bit of a Riverside County market update. What are things doing compared to last year? We'll hit on a few cities. If there's one you want to see specifically or hear about specifically, drop in the comments and I'll get that data for you. We're going to give a little rate update. So I got my friend Cody here on doing the loan thing. We'll go into rates a little bit, some down payment assistance programs, and what we're going to cap it off with at the end is some tips and tricks to get into a home before Christmas. So
Yeah.
if that's something you're interested in, we'll cover bases. Hopefully, get you taken care of. If that's something you want to try, we could absolutely do it. Hello, yeah. And any questions you the viewers have in the meantime, drop them, and we'll comment or answer them as we go. So I'm here today. My lender, Cody, this is my trusted lender, my main guy, and he
Appreciate that.
always. Oh, cool. Thank you, Elizabeth. Means a lot. So, little market recap, market update. Things have been pretty flat from what I'm seeing. Some cities are seeing more of a decline. Others are just seeing really nothing happen at all. So I pulled Riverside County as a whole, compared to September of 2024 and September of 2025, which we're in now. Last year there was average sales price in Riverside County was 590. This year it's 595, and this is for the county as a whole, not the actual city. So pretty flat. This is where it was interesting. Months inventory September this time last year versus September of this year, 4.2 for both. That is as flat
Oh,
as it's going to
wow.
get. It's
Yeah.
weird, right?
hmm
Now this part was actually interesting. It's showing that listings are on the rise. Active listings this time last year in Riverside County, 8,300. This year we are sitting at 9,005.
Oh,
So
wow.
we're up quite a bit. That's not what that'd probably be about what up about 8% inventory.
Yeah.
Now Riverside City for those numbers. Riverside City active listings last year. Or I'm sorry, sales price. Average sales price last year was 642. This year it's 640, so down about $2,000.
Yep.
Now LA City, it's pretty flat too. Because what I look for, I'm not sure if you look at this too, is what is LA, what is Orange County doing? Because where we're at the Inland Empire, we kind of get the ripple effect after the fact.
hmm
So no shock there. The average for LA City average sales price last year was $1,030,000. This year it's 1 million. It's actually up 1,060,000.
Oh, wow.
So it's actually up a little bit. So you could say we're probably going to see that soon here.
Yep.
Um, for LA City, the month's inventory last year 5.8. This year we're at 6.1. So it's ticking up, similar to here.
hmm
Active listings in LA City this time last year was 3,500. This year we're at 3,900. So it's not really moving too much.
No.
Kind of what I've been noticing is I think of it like the market's kind of in bumpers right now. Once it goes up to about here, it kind of starts coming back down this way. It's just really not going anywhere.
Yeah,
Um,
especially with the data around the holidays is going to be stagnant. I mean, that's typically not usually super stagnant, but like right now, it's the markets have already been a little bit slower because of rates, and then you have the holidays coming as well. So you're kind of getting a double whammy there. So not super surprising that it's going to continue to be that way the rest of the year. But I mean, the rates are starting to settle, so I think we're going to start seeing some action, especially early next year.
Yeah, I kind of had a feeling, because the last couple of years, and we've talked about this ad nauseum on the last few videos, is the the spring market's been delayed every year since 2022. Or yeah, 2022, I'd say it was then. It was like that spring market shifted back by 4 to 6 weeks, where 23 it really picked up in July. Last year was like August, September. I noticed a lot of activity. This year it felt like it was building, but it just really hasn't popped. It hasn't really gone. It's like
Yeah.
because I sit a lot of open houses. I got a few listings we're sitting on, and activity's been up the last few weeks. I mean, really since that Fed rate cut,
Mhm.
but we're not seeing those offers that we would normally see.
No, and I think the inventory increase obviously affects that. Like, buyers have more choices now, which, as we say, is it's a good thing for buyers that they have more selection. But I think people are under this misconception that houses are being listed like crazy and there's so much inventory when the houses I don't think are being listed any faster than they were before. They're just sitting for longer now.
Yeah, yeah.
30
Days
day
on
on
market's
30.
absolutely up.
Yeah.
Yeah, I didn't pull that in my data, but I've noticed it's up by, sometimes 2 or 3 weeks in most areas. I think this time last year, if we took listings, we would warn our sellers, "Hey, we're looking at probably about, 17 to 30 days." Right now, I'm telling people probably about 28 to 45 of,
Yeah.
marketing time and before we start seeing those good offers.
Yeah, I mean that's just what it is right now, especially around this time. And I think that's picking up the inventory and giving buyers more selection. But at the same time, I mean, as a seller, you have to be kind of prepared for that. Not that you're not going to get what you're asking for the house; it just might take a little longer.
Yeah, it's gonna be a little more patience,
Mhm.
is the big thing. And it's not really. I know a lot of people are saying buyer's market, but I don't really see it that way. Like, this market, it really does feel like 2018, 2019.
Yeah,
I'd say it's balanced. It's not really
yeah.
buyers or sell it's not pro buyer, pro seller. It's balanced.
No, I agree. Yeah, I think you're right. I think that the market is balanced, and I think it's so weird. I know I talked about this last time. It depends on the property. Like some properties you can submit an offer and it's going to get accepted, and some properties have 10 offers, and it's like it depends on how it's marketed and what area it's in, and there's so many factors. But overall, I do agree. I think it's a balanced market.
Yeah, and with the rise in inventory and, things being really like a peak affordability, I think what we're running into now is buyers they're being a little more picky, as they should be.
Hmm.
So when it's not, because the homes that look great and they're priced right, those are gone.
Correct.
They go quick. I mean, I had a few this weekend. I was showing buyers, and they wanted to wait. I'm like, these ones, they're priced probably about 5% below market, which is, it's a really good strategy on the sell side. But those are the ones generating the multiple offers. For
Yeah.
instance, I did see one, and it was completely dated. It was a 1976 build. Still had kind of green carpet, but everything in it was just cared for. Like, it looked great, and
Yeah.
they were priced. They should have been at about 530. They're right at 499. It was gone.
Yeah.
I called the agent today. He's like, we had 10 offers yesterday.
Yeah, see,
You don't
so
see that
by
often.
by going in that 499, they're gonna get their 530, or close to it. So it's a great strategy, but um yeah, it's tough. Some of the properties look great, and I think it's just a lot more about being prepared to go on market now. During COVID, when rates were so low, you could list anything pretty much and it was set because
Yeah.
people wanted to buy. But now which is I think that's a good thing. I think that's a pro for buyers though, really. Like the fact that you're gonna be buying potentially a cleaner house or something that had more effort put into it, whether it was over time or before it went to market, that's a good thing for buyers.
Yeah, yeah. Well, you're getting into something that somebody cared about and loved. But, like, to your point, during COVID, you could put the sign in the yard on any and pop three crappy pictures up, and you'd have a line outside. And
Literally.
I think a lot of sellers, they bought during that time. People that are selling now, so that's kind of what they thought the sell side was going to be. So
Hmm.
that's kind of how they prime their minds at that time. So they have a little bit of a learning curve to get to today's market, the 2025 market.
100%. Yeah. I think there's a lot of talk about buyers market, sellers market, like within like the social media and all this. I know that's what people see, the mainstream media talks about that a lot. um Obviously we always tell people just buy when you're ready and when you can, but it's hard to tell someone that. Everyone wants to buy in the perfect market, it just doesn't really exist. Like
Hmm.
people would argue that COVID was a perfect market, but like we were saying, like you would have to go so far over asking, like it wasn't perfect. Like the rates were good, but I mean,
Yeah.
it doesn't mean that it was a perfectly balanced market. It definitely wasn't.
No, it was stressful. I mean, like, on the sell side, like the buy side, obviously, you show up and you got to wait in line to get into the home. And
Mm.
it could be a 30, 45 minute line, which was very common. And you had a time limit, because of the COVID restrictions here in California. But it was stressful. I think most of my buyers, we were writing like 10, 15 offers before something would get accepted.
See, that's the side that lenders don't see. Like, we don't see that side of it because you guys are out doing the footwork and showing houses. But it was hard for us because it's hard to explain to someone that, let's say they're going to buy a house for 500 grand, they're going to do FHA and they need 25,000 bucks to close for down payment closing costs on average, whatever, close.
Yeah.
It's hard to say, hey, by the way, you actually need 50 grand. And then to explain to them, yeah, you're going to have to go 20K over appraisal to even get your offer accepted. And here's why. They're like,
Yeah.
wait, but it says 25,000 on the estimate. I'm like, yeah, that's for the loan, but then you're going to need more money on top of that. It was a really weird time.
Yeah, no, it was. I honestly had a really hard time,
Yeah.
yeah, everyone wanted to buy at that time. Almost
Mhm.
nobody wanted to sell. A lot of programs disappeared. Like down payment assistance was my bread and butter before COVID. No
Yep.
seller would entertain it at that time.
Not even close.
And I still feel like down payment assistance hasn't made the comeback that it really deserves. Um,
No.
yeah, and then on the sales side, it was overwhelming. You'd have a, a million requests to show the home, and I think before that it was like about half the people that showed would write. At that time, it was I
Mhm.
think everybody that showed would write. So if you had 100 showings, you'd have I think my worst one was it was 63 offers.
See, and it's like you have to go through
Yeah.
all that and go through all the with the seller. That's insane.
Yeah, yeah, and I mean, you have to go through all of them. It's like you could
Or
ask
then
your
you have
sellers
to
like,
tell
"Hey, is there anything that?"
62 people that they didn't get the house.
Yeah, yeah, those were it was just a big blanket email that I hated sending.
Yeah.
It wasn't fun, but it was crazy. I mean, I developed some pretty cool strategies or some systems during that time on how to present and how to go over them all, just so we weren't missing something.
Mhm.
Because you'd have let's say you were listed at 500 at that time, you'd have offers at 550.
Mhm.
So like, what do? You throw out everything under 500, 525.
Yeah.
It's and on the buy side, you had to be very, very well versed and well scripted on how to proceed, because if you had a buyer that really wanted the house and they weren't ready to do that over asking offer, you had to prep them and try and stay in communication without listing it and say, hey, where do we need to be at? Because it was just it was a gamble back then.
It was, yeah, and it's hard to tell people like because people want to. A lot of the times, buyers, especially in Southern California, this isn't true in every market, but most people want to go up to their max approval because the
Mm.
prices are, you can spend anything here, depending on what market you're in. So it's hard to tell people like, oh, I'm approved for 600, but yeah, but you need to probably be looking around like 550 because you're gonna have
Yeah.
to, it's weird. So
That's exactly what it was. It's like, okay, this is your approval. This is probably where we're gonna have to go to. Let's start at 525, 550.
yeah.
If we know that 600 is your max.
Hmm.
And it's a weird conversation. It's a really weird conversation.
It was, yeah, but I mean, it was part of it, and I mean, now I think right now it's a much healthier market for sure. I think with
Yeah,
rates are getting better, so that's helpful, and people are starting to come out of the woodworks and be interested in buying again. Like you were saying, when you're making calls, it's a different conversation now. People are open to it, not just like, oh, the rate's 7%. Don't even talk to me. Like that's not. It's not like that anymore, which is nice.
yeah, yeah. And the conversation with people come through open houses or reaching out online or through YouTube, TikTok, whatever, was always like, we're interested, we want to do something, but we're waiting for prices or rates to come down. I don't know if you've noticed this, but the last couple weeks, I don't think people are aware of where rates are even.
Hmm.
I was on the phone before we hopped on this, and I talked to three different people, and they're like, "Oh, we're waiting for under 6%." Okay, well, what programs are you looking at? Oh, we don't know. Well, I have lenders offering 5.7, 5.8 right now.
Yeah.
Like, oh, really? It's I don't think people are watching like they were, or maybe just the news isn't as loud as it was about it. But I mean, we're in a weird time in the
Oh,
country.
for sure.
It's the misdirection is constant.
It's hard because there's so much information out there, and
Mhm.
a lot of that information isn't from people that do loans every day, or people that are real estate agents every day, or it's from people that are part-time, one or the other. And it's hard. Like there's so much like information that's either incorrect or partially incorrect. It's really hard because people come to us with that information that they heard and they think it's right. So then we're like the ones, now we seem wrong, but we're
Yeah,
actually correct. So it's very weird. I agree with that. I think the noise on social media is tough. Um, that's why it's good to talk to someone personally and actually get pre-approved and get an idea of what you want and look at the numbers and all that stuff.
yeah,
That's why I like to do buyer consultations in person with first-time buyers because there's so much we can get out of the way if they come into my office and sit down with me, or we do a Zoom call or something. If you just send an email and break it down to them, they still have so many questions, so it's tough.
yeah. And it's hard to, if you don't really grasp it. Like, say you're first, even if you're a second or third time buyer, there's no way you're going to remember everything.
Correct. Exactly. Yeah.
It's like, even timelines, contingencies, EMD, closing disclosure, loan estimate. like, yeah, in the moment you might grasp it, but now remove yourself about 5 years. It's
And
it's
everything
important to go through all this
changes.
stuff.
Hmm.
Yeah. Yeah, even in it's with us, there's always a new document that comes out every 6 months, or they expand, our current document. So it's important to have that sit down and to make sure you understand the process and what your funds are going to and what each one means.
Oh, for sure. I agree.
Yeah. And yeah, another thing with like the social medias too, when you're looking at rates or talking about rates is, most social media, it's like today, today, today.
Hmm.
And like TikTok, for example, it's because I'm really into this world now. TikTok, it'll show you something that's completely irrelevant.
Hmm.
If something did good, let's say, March of this year, like it's a video that just kept going and going and going. Even if it's
Yeah.
about rates, it'll keep putting it in front of you. And
Yeah.
so you're looking at old data at that point. Like, yeah, you're hearing news, but it's old news at that point. It's really hard to decipher that.
Yeah, it is for sure, and that's tough. That's another thing that's the deal with social media is why it's hard, and like it's just one of those things where there's more noise. So yeah, that's I didn't even consider that, and it's hard to tell like when it was actually originally posted.
Yeah. Well, I have one, or I have a couple, but I have one every day. It's from I think August of 24, and it's on how to buy a mobile home. And I still get comments on it every day,
That's
even on the
crazy.
house. So like, oh, what's the down payment for this house? Something like that. Where then it's just like, oh, well, this thing sold like a year ago, but like, what are you supposed to do? Take it down?
Yeah,
You
yeah.
know? And it's Instagram's a little bit different, where it seems like it disappears after a day or two.
Hmm.
So, but like, I mean, who's on there watching all the time? And then, it's the way the algorithm works. It's if you like this realtor's video who's posting something, another realtor posts like similar content, you're just going to keep getting all this like back and forth conflicting information. So,
Yeah.
when you are getting that info, just pay attention to where it's coming from, or just it's important to find that trusted realtor or lender that you get your information from.
It is, and it's another thing too when people see like lenders or whoever quoting rates and APR online. They're quoting 740 plus credit,
Yeah,
all these different good criteria, single family residence, all these different things to make it as good as possible. So when someone comes to us, they're like, "Oh, well, I just saw Joe at ABC Mortgage. He quoted six and a quarter, and you're telling me it's six and a half." Well, I'm like, okay, well, he's quoting a 740 credit score, and you have a 600 or whatever, 680. It's another conversation that's like tough, because it's like it looks like I'm the bad guy now, or you're the bad guy, or whoever.
yeah, yeah. Or
And
you don't
it's
know what
not
you're
the
doing, or
case.
you're trying to rip them off, or
Yeah.
really you're trying to advise them as best as possible.
Correct. Yeah.
Yeah.
So, I mean, the generic quotes online are one thing. It gives you an idea of kind of where the market is on average, but it doesn't really tell you like what your rate's going to be because everyone's a little bit different. Even the property type can affect your rate. If you're buying an attached condo, it can affect it, things like that. So, mobile homes are different. So, there's
Mhm.
all these different things. You could have a perfect profile, and your property type can affect your interest rate.
Yeah, oh yeah, yeah, definitely, and that's something until you sit down and really start game planning, you can't really it's hard to find information on that,
Hmm.
like, I've looked, I'll do, like, the Google rabbit hole every now and then, just kinda, like, trying to figure out, like, what, buyers and sellers, what they're finding when they start looking, you just type in something as simple as how to sell a house or how to buy a house,
Hmm.
and then I'll do that every now and then. So it's like, okay, like how do I present, this information? Because I want to see what they're seeing or what they're finding or what kind of misinformation they're coming across.
Right.
And there's a lot. I mean, the amount of because I do a lot of mobile homes. The amount of times I've actually had a mobile listed, and I have buyers, coming in or agents, representing buyers, and I'll go through the pre-approval. I'm like, this isn't even close. Like
Yeah.
this isn't how the process is gonna work. And
Right.
call the lender. And it's like, oh yeah, no, I do these all the time. I do these all the time. And I kind of have that series of qualifying questions. And it's like, oh well, actually, my brokerage does them, so I have help. And that's usually not even true too. Yeah,
Yeah.
but that's with mobiles. I think condos is kind of starting to turn into that same animal.
Hmm.
It's
Condos are tough.
they're tough, and they're getting tougher with the all the insurance stuff going on.
Yeah, it's crazy. Every time like someone wants to submit an offer on a condo, it's like it didn't used to be like that. Now it's like, oh, here we go, and it
Yeah.
sucks because it's not any fault to the buyer. it's out of their control. It's out of our control. So it's one of those things again where it's like it's hard to talk to them about that because they don't really understand what the deal is. But it's like, hey, there's an issue with the property. Like it's not even anything to do with you.
Yeah.
It's you're perfectly qualified. It's just that the bank won't finance this property for XYZ.
Yeah, and it's this complex for
Hmm.
whatever reason, but if you go around the corner, that one's totally fine.
Correct. So
Yeah.
strange.
Yeah, and they like when they're on like the Zillows and the Redfins of the world and they're seeing these and it pops in that little payment estimator down there
Hmm.
and they're like, "Oh, I could totally afford, whatever it is," because it's always, let's say it's a $350,000 condo and that payment estimator says like 2,300 a month and
Yeah.
it's just like, "Oh yeah, no, I can afford that." And then they come to the lender and the lender's, "Well, your loan won't work for this one or this one doesn't qualify for that financing." But every time they go back on that website, they have that teaser again. It's
Yeah.
like, well, like, why is the internet saying it if it's not true? But it's the internet, you know?
Yeah, no, for sure. That's tough too. And that's all those are based off 20% down and all these things that are
Oh,
pushed.
impeccable credit. Yeah, 20% down.
Yeah, so
Perfect world
it's tough.
scenario.
I feel like that stuff's like not fair to people because most of the time it's the first thing they see because if people
Mhm.
go on Zillow or Redfin or whatever the case is, and that's the first thing they see. Oh, how much is a payment? Well, you got to open the payment calculator and do the breakdown and look at like 20% down. If you're putting 20% down, it might be relatively close. It's probably still going to be off, but it's not going to be a landslide off. Now, if you're
No.
putting 5% down or 3.5% down, it's going to be way off.
Yeah. And for those watching, if you really want to get the most accurate out of like Zillow's mortgage calculator or whatever you want, go in and preset everything or reset. So your down payment, you're going to put it about 3.5% because that's almost everybody's doing right now. 3.5%, whatever the prevailing rate is. Right now, it's about 6%. I think for the next probably like 6 months, if you say 6%, that's pretty fair.
Mhm.
And then you have to do a little drop down. This is in Zillow's. The little drop down screen. It has the option for HOA, taxes, insurance, PMI, etc. Go and set all those on your insurance right now. I mean, you're probably quoting people what like around 2,500 bucks
Yeah, I do
or
200
factoring.
a month, 2,500. Yeah, a year.
Yeah,
Yeah.
yeah, and then your property taxes too, which those are going to change from area to area. Zillow doesn't account for that. I don't know
No.
if Zillow's going to hurt my algorithm in this because I know they have a lot of pull on Google, but we'll just call them Z. But they don't account for your property taxes. They'll auto default them at like 0.8.
Yeah, I've seen that happen too. So, I
Yeah,
mean, we use 1.25% of the purchase price divided by 12 as lenders. So,
yeah,
that's
and
going
it
to
gives
be
you some
kind of your,
buffer.
yeah, that's going to be kind of your average. If it's a house that's built after 2000, it's probably going to be more. If it's a
Hmm.
new build, it's going to be significantly more. Um, but I think that 1.25% number is, that's the industry standard and it's kind of what we go off of. It seems to get us close 99% of the time.
Yeah,
So, yeah, those are good tips, good things to keep in mind. That way, at least if you're looking at a calculator online and you go to your lender, you're like, hey, look, I know the payment's roughly this, and you're within a couple $100. You don't get surprised by like, oh yeah, you qualify, but the payment's $1,600 more than you thought it was.
yeah, and that hurts. That's
And
pain.
yeah, for
That's
sure.
heartbreak.
Yeah, for sure. Then you're like, well,
Yeah,
I don't want to buy anymore. Yeah.
yeah, yeah. It's depressing. You're looking at something in like Orange Crest Riverside, and now all of a sudden you're priced down into like Yucca.
Yeah. You're like, well, dang, I just had to drive a lot farther now. That sucks.
Yeah, yeah,
Yeah.
for yeah.
Yeah, it's crazy. So that's good. That's good advice for sure.
Yeah, it's I try and walk people through it, but it's confusing. I've used it a million times, so to me it just completely makes sense. But
Yeah.
it's property taxes, interest rate, and home insurance amount is always what jams people up.
Yep. For
Always, just
sure.
because it's hard to calculate. But yeah, factor about like like if you're looking at something after 2000, just put 1.4%. If it's after 2010, put like 1.8. Those aren't exact numbers, but they'll keep you in the ballpark.
Yeah.
Insurance just figure probably about 2,500. I mean, more than likely you could hit 3,600 depending on the company you go with.
Yeah. Yeah. I would say 2,500 is pretty fair though for most
Yeah,
areas, but yeah, I mean, there's fluctuation. It's going to be an estimate for sure, but that'll get you really close. So that's at least not going to give you too much of a surprise, if any.
yeah, yeah. Or if you really want to know something accurate, shoot Cody a message. Just say I saw this property. Can you give me a payment simulator or down payment? What options are there?
Yeah, you could just say, "Hey, I saw this property. Here's the address. Here's my credit score. Here's how much money I have down, and I'll give you a payment on it, and it's going to be extremely close."
Yeah. Okay, so let's shift gears now. Rates is always kind of a hot topic in real estate. That's when I'm having my conversations with people at open houses, what have you.
Yep.
That's always the topic. When are they going to come down? What are they doing? I think we've been seeing rates get better the last week and a half, 2 weeks.
Hmm.
Uh,
Yeah, the rates are getting better. The government shutdown still is in effect.
is that
Um,
affecting the government shutdown? How's that affecting your guys' side on the loan side?
we're having a little bit slower turn times with some of the HUD stuff. Like this FHA, couple FHA forms, nothing crazy. I know that USDA loans are basically at a complete standstill,
Okay.
meaning that they're not getting done at all. Not super common that we do a ton of those, but if you are interested in one, they're pretty
Well,
much.
since you brought up USDA loans, can you give like a brief explanation of what those are and who they might benefit?
Yeah, USDA loans for like like a rural area, like outside of town, like on acreage, typically. Little to no down payment is the idea. Things like that. They have very good terms, but the property has to qualify again. So it's one of those things where it's property specific. Um, so it doesn't work in a ton of areas where we are in the Inland Empire.
Yeah,
There are.
you have to get out to like Yucca. I've seen Desert Hot Springs pop up on there.
Yeah.
There used to be pockets in Nuevo and Paris, but I think those are all depleted now.
Yeah, I think they are too, or they're close to being depleted. So that's kind of tough. But yeah, it's a good loan for the if the property qualifies, and we have ways to check if the property qualifies or not. So yeah, that would be a low to no down payment option with it has some pretty tight restrictions as far as the debt to income ratio goes. I know the underwriting on it's pretty tough. Just because of the terms they give you are very favorable and they want to have the risk as little as possible from the lender standpoint. So a little bit tough, but I've done them and they're good. They're great loans, but it's one of those things where you kind of have to fit in this perfect box. But if you do,
Mhm.
it's great.
Yeah, I had one USDA, and this is actually like probably like one of the best examples. I mean, it was perfect. They were originally looking. This is years ago. I helped them do credit repair. This is probably like 2018, 2019.
Hmm.
Helped them do credit repair. They didn't have a lot of income, so they saved up about $1,500. We were looking at doing USDA. We were kind of looking around Paris, Nuevo, Mead Valley, that area. It wasn't working for them. They ended up going out to Yucca Valley. It was right on the border of Yucca and Landers, which is out there.
Okay.
And they got in for literally zero down. They brought in a It was so zero down that I had to convince the seller to let us bring in a $500 deposit
Wow.
because they did not have the 1%.
Wow.
So they agreed to the $500 deposit, and then at the end of escrow, they actually got it back.
Oh yeah. So it's
Th-
just like a placeholder. That's cool.
They came in with like nothing.
Yeah.
Sat on
That's
it for two
amazing.
years. They ended up making it was like 25,000. So
Oh
they took
wow.
that, moved back to Homeland where they wanted to be, and just used that for their down payment.
That's perfect, man.
But
That's
yeah,
awesome.
that is like my favorite. Like the USDA thing went perfect. That is like my favorite example. I couldn't have scripted that any better.
That's a great example. It's very rare that that would happen, but it's
Yeah,
amazing when it does work out like that. They're great loans. So that's one of the programs right now that's kind of at a standstill with the shutdown. Other than that, everything's pretty much normal. Rate wise, we're not seeing a ton of movement.
yeah.
The rates are getting a tiny bit better, like daily. And that doesn't mean, like I said before, that doesn't necessarily mean that like you're going to go from a 6% rate to a 5.875. It just means like maybe if you're buying your rate down 1 point, now your that cost has gotten lower because the market has improved a little. Is more or less what I'm talking about when I say that.
Hmm.
Um, so the rates are pretty flat right now. But yeah, I mean everything else, no major effect. I know they're talking about cutting the rates again. The Fed's talking about doing a Fed cut this the end of this month, so we'll see if that happens or not. It sounds like it's pretty positive that it will, so we'll see how that plays out.
What would deter that from happening?
There would have to be some kind of market update slash report that came out that was very shifting toward not doing that in the meantime, which is very unlikely. like some kind of Fed meeting or something like that. So most of the stuff this month is pretty much already done. So that's why there's so much certainty in the market that it's going to happen, because we're pretty much already locked in, and it's basically already priced into the market slowly but surely. So
Yeah.
um, typically, like a jobs report or unemployment report or something like that would shift it and have them hold off on doing it. But there's not enough strong reports right now for them to justify not doing it. They're trying to stimulate the economy at this point.
Okay. Yeah. Fingers crossed. I think I don't think we're gonna have any issues with it. So
No,
with this cut, like roughly, where are we gonna be at, or if
I
say they
mean,
drop it a quarter?
yeah, the market's already getting better. I mean, we're hoping the FHA stays in the high fives, and then conventionals low sixes, maybe six flat, depending on the scenario, something like that. But I mean, I think the market's slowly improving, and the problem is, again, when they cut the rates, the rates will actually jump. The mortgage rates will actually jump up probably the day after, which is typical. But
This usually
after
how it
that,
goes. Yeah.
yeah. So I think it's slowly trending down that way. It's just not going to be. It's not dollar for dollar, like I said before. So, but we're moving in the right direction overall. I mean, even the last 6 months, we're moving in the right direction. So, um, I think we're looking good. It's one of those things that takes forever. They say rates going up is like you're on an elevator, and going down is like you're walking slowly downstairs. It's kind of how they say it.
Yeah, I think we've proved that the last couple years. I'm actually on CalHFA's website right now. They're advertising down payment assistance right now at about 5.875.
Hmm.
So if that's something you're interested in, I've actually been getting a lot of calls about, like, I'm having that conversation again with people about down payment assistance.
That's a good rate. I mean, that's super good. I'm surprised they're that low right now.
Yeah, yeah, no, that is low. I know some of the new builders were offering like 5.75 for down payment assistance. Not all of
Yeah,
them.
I've gotten some FHA people with a small rate buy down into the high fives. So, like the high five stuff is, I mean, for down payment assistance, it's impressive. And that's awesome because any lender has access to that. I can do a CalHFA if that's something people are interested in, no problem at all.
Yeah.
So, but I think that's another thing with builders. They're having to give more incentive now because 6 months ago, or when the rates were 7%, that 5.8 offer looked amazing.
Oh, they're great. Yeah, for a while. When they
Yeah,
were offering
now that the
like their own
rates
rates
are
at 5.25, I was like, whoa, why
yeah,
wouldn't you? It's a no brainer.
right. Now that the rates are starting to improve slowly, their incentive isn't looking so good. So now they're saying, okay, well, we'll also give you this, and we'll give you closing costs, and we'll do this, and we'll pay your. I saw one was paying like an HOA for a year and all these different things.
In
So
Beaumont, there's one that pay it for, I think it's 3 years.
that's insane.
Yeah,
So stuff
actually,
like
I
that.
had a call from one of my Beaumont reps. They were offering 3-year paid HOA, free internet, basic internet for 3 years, and then what was it? I think it was electricity for 3 years if you use their solar rep.
Wow.
I was like, holy cow!
That's crazy. So I think yeah, I mean they have a lot of good deals. I'm really that's cool about CalHFA. That's good to know.
Yeah,
I
I'm gonna
recently.
put together a mass email after this and send that out because that's a stellar rate right now.
Yeah, if people are interested in that, that's a good deal. I mean, typically the issue with CalHFA is that their spread on their interest rate is so much higher than market. So that's kind of where they're getting their quote unquote free money back. Um but right, I mean, it sounds like if they're at 5.8, that's really good. So that's a good deal.
Yeah, yeah, definitely. And then CalHFA, you do quite a few of them. Are you seeing more people use them again? Because I feel like they just literally like disappeared for not disappeared, but it was like they got this bad name during COVID. Just not the actual program, but the down payment assistance type stuff really was frowned upon during that time. I
Yeah,
feel like it just hasn't made the comeback that like I would expect it to.
I agree. I haven't seen it making the comeback either. Um, I know there's properties where you could get away with it that have been on the market for, the seller's willing to work with you, things like that.
Hmm.
I just think that I haven't seen a buyer that happened to have a down payment assistance and, go to offer on said property. Of course, everyone wants the freshly listed, beautiful home that just came on the market that's priced well, of course, like we were talking about earlier.
Yeah.
So I haven't really seen them make that comeback either. I think they will. I just think they haven't quite yet.
Yeah, yeah, I think when people kind of wrap their head around like, how they work, it will, but like like I know when they sit down with a lender and we're saying 5.7 or what was it 5.8. Um, when you're looking at like you want to hear 3% or you want to hear 4% because that's what it was for so long. So then you hear market is 6% or whatever it is, and then you hear you could do down payment assistance, but it's a little bit higher.
Hmm.
It's your payment's going to be higher, so it's just like let's just try and save on the rate as much as possible. And I think that's why people really aren't utilizing it.
Yeah.
Also, I think there's a crop of agents that came in during 2020, 2021, and down payment assistance for them is almost like a derogatory term.
Yeah, pretty much. That's true too. Absolutely. There's a lot of people that don't work with it or what have you. So that's another thing to consider. It's good to get some multiple opinions on that because if you fit in that box and you're looking for that, then it's a great thing.
Oh yeah, definitely. I mean, get into a house with minimal down,
Yeah.
and if you play it right, like the strategy I would pitch to my buyers is let's do down payment assistance. Let's find something that's been on the market for 30 plus days. Ask for our 2 to 3% back in closing costs, and you're getting in with like what probably 1% out of pocket.
Yeah, it's typically about 1% out of pocket. I was just going to mention that too. So that's something to keep in mind. And if you're buying a house for 600,000, you can expect to come out of pocket 6 or 7 grand. Um,
Yeah,
a lot of people, it's like baked in people's mind that down payment assistance means I'm not coming out of pocket with any money, and it means you're coming out of pocket with less money. Your down payment is covered. You still have your closing costs, and
yeah.
so there's definitely still costs involved. You have your appraisal and your inspection and all these, your initial deposit, all that things like that. So, but it definitely lowers your total cost significantly, which is great.
Yeah, put that back into the house or throw it into your retirement, and
Yeah.
do your 5 years in the house, and then sell that one and buy your dream home.
Yeah, exactly. Yeah, that's what a lot of people do. I think the average time and spent in a house is 5 years, isn't it? Something like that.
Something like that. Yeah, it used to be when I got in the business in 2015. It was I think it was like 7.5 or something, and then now it's closer to 5. I think we're going to see that start jumping back up though with the golden handcuff situation.
Yeah, I agree. Yeah, there's certain people where I mean, if you bought a house during COVID with the low interest rate, you can do such a big down payment on a new one that your payment would be essentially the same, but you're likely not going to go down in payment because you're trying to go up in house. So
Yeah,
yeah, you have a huge down payment from your equity that you built up over the years, but it's still not going to get you to a point where the payment's cheaper, especially with the property taxes being taken into account and stuff like that.
yeah. It's not like it was before, where you buy in like 2010, 2012, and you're there 5, 7 years, and you want something bigger, and yeah, you're going to buy more property tax. You're going to go up in price point, but
Hmm.
the interest rate was pretty similar for so long that you were going to go up in price, but I mean, your monthly might change by about $300. Now we're looking
Right.
at, I saw one, it was like 2,100,
Hmm.
like more than what they were
Yeah.
paying before. That is hard to freaking sell.
Yeah, especially when, like those people, I mean, they want the house, you want to upgrade or what have you, but it's hard to be like, yeah, your payment's going to go up 2 grand a month. Like, that's a lot, especially when you came from a mortgage that was probably relatively low to begin with,
Yeah.
you
Yeah.
know?
It's probably lower than rents when you bought it.
Yeah.
Now from what I'm seeing, I think rents are usually cheaper than purchasing.
Yeah,
Like,
they are now for sure.
yeah, they'll catch it though. They always do.
Yeah, for sure. It'll come back
Yeah.
around. It's just not there yet.
Yeah. All right, so we're at about 40 minutes. One thing I kind of wanted to talk about too was tips and tricks to get into a home prior to Christmas. We're in, I guess you could say, late October now. We're right before Halloween. 69 days until Christmas. I just Googled it instead of
Wow.
being a nerd and doing the math. So our average, my team and I, our average from when you say, hey, we're pre-approved, we're ready to go. I'm 45. My average is 45 days.
Hmm.
That's offers, counter offers, showings, negotiations, and escrow time. So if getting into a home prior to Christmas is, something that you're interested in, you absolutely have time. I think the best Christmas gift you can give your wife or your kids is a home. You got any tips, any tricks that you can think of, Cody?
I would say talk to someone soon, since that time is obviously approaching.
Mhm.
The next couple weeks, I would get with a lender and an agent. Um, and start strategizing on what you're looking for. I think being specific about where you want to be is very important. Because if you're like, well, I'm okay with these 8 cities, okay, well, you're going to be looking and being overwhelmed with so many options. So
It's a big
really,
freaking net.
yeah, so
Yeah,
really narrow it down to a small net, I think is probably my number one recommendation. Obviously, getting pre-approved, like
yeah,
that's we can do that in a day. That's
yeah.
I'm not worried
To
about that.
build on that though, I would say figure out like what cities you like or what areas. But after that, let's look at numbers, figure out numbers, because that whatever $600,000 pre-approval, that's way different in Riverside versus like a Merino Valley versus
Yep.
let's say Menifee. You even go to Riverside to Menifee, it's that $600,000 is a completely different house.
Yeah, 100%. So that's my number one recommendation.
I think we're losing you, buddy. Can you hear me? And I think we lost Cody there. If you guys are still watching, give me a thumbs up if you can actually hear me. All right. Yeah, I'm still on. Um, okay, so I'll wrap it up. I think we lost Cody there, unfortunately. But tips and tricks to get into your home before Christmas. Like I was saying, I average about 45 days. My team's about 60 days. I think if you look at industry average from when you decide what you want, where you want, and what you're looking for, it's usually probably about like 45 to 60 days on average. So you absolutely have time. But first thing would be to figure out your numbers. What do your numbers look like? What does your financial situation look like? What are you comfortable coming out of pocket with? And what does that mean for different areas? If you're looking at resale versus new build, it could be very, very different. One of the hardest parts about listing a resale home right now is there's so many new builds offering so many amazing options. And if you've been on my channel for a while, I go over a lot of those. Rate buy downs, cash back, seller incentives. Some of them are just offering flat out better rates. One of the coolest ones I've seen lately is some of them are offering like almost like a 3-2-1 buy down, where your first year is a low rate, then it goes up 1%, then 1%, then 1%, and then it stays that way for the next was it year three through 30. Some of them are really good. Other ones are designed kind of like an ARM, adjustable rate mortgage, where that might not be the best thing for you, but it might be if you don't plan on being there longer than 3 or 5 years. After that, we start narrowing down what area you want to be in and what kind of offers we can actually submit in those areas. And by that, what I mean, sorry, by that, what I mean is, are we asking for closing costs? Are we asking for help with incentives for a rate buy down? If that's the case, I think Cody's back. But if that's the case, we're going to want to look at stuff that's been on the market a little bit longer. Are we back?
My phone died. Sorry about that.
Oh man, I was sitting there like,
Dude, my phone died.
all
So I'm
right,
back in business
we
now.
good? You're plugged in.
Yep.
Okay, so I was going off, piggybacking off what we were talking about. I was talking about how once we get numbers and we decide what area we want to be in or where we should be shopping, what kind of offers are we going to be able to write? Are we going to need something that's going to take more time? Typically we're at 30 days. It's
Yeah.
do we have a loan that we're going to need 45 days for whatever reason? So we're going to
Yeah.
want to take that into account when we're writing offers.
Yeah, for sure. Typically, the stuff we do is quick, so we can close as fast as we need to. But if for some reason the buyer needs more time, or maybe the seller needs more time, then we can be flexible. So I think the key is being able to close fast, and then being able to slow down the process if needed for other people.
Hmm.
Whether it's buyer or seller. So that's super important. But once you find the
Yeah,
property and everything, that's probably the toughest part, getting it into contract. And then from there you can see what you need from the process as far as timeline.
yeah, and then with that, when we're actually looking at properties and we know what kind of timelines we need or what kind of assistance we're going to need, If we're looking at stuff that's like fresh on the market and we know it's going to sell fast, if we're asking for a lot of help, which that's fine, that happens. That's probably not our best way to go about it.
Correct.
It's typically we're going to want to look for something that we think might be a little overpriced or something that's been sitting for a long time.
Yeah.
Like I think price drops is one of the most popular things people are looking at right now on Instagram and TikTok.
Yeah,
But
100%. It's definitely property dependent, what you can
mhm,
and can't get away with. I've seen people get a ton of credit, but the property's been on the market for, a good amount of time. And sometimes the seller won't even look at it because they just listed it, a few days ago, and the open houses over the weekend were super busy. And so they're expecting, a ton of offers, and it totally depends. So,
yeah,
um,
and they're not going to shortcut themselves too fast.
mhm.
Us as agents, we're trained on how to price properties. Like we know if we go in and price something way over what the market is saying it should be at or what the neighborhood is doing, it's going to sit for a long time, and we're advising our sellers on that. Most of us, anyways.
Yeah,
It's
yeah.
if we price too low, then we're attracting too much interest that isn't really going to matter when all's said and done.
Yeah, for sure. And I think, like I was saying before, um, I think that the getting the cast is, your net as small as possible is the most important thing. From there, we can kind of strategize on what we want to do as far as timelines and things like that. Once we, and how we want to offer on the house, that's where you guys come in and, I think you should offer this and here's why, things like that. But
Hmm.
I mean, I think getting it pinpointed down to where you want to be is very important, because if not, it gets super overwhelming and you start questioning every single thing about the process and stuff like that. So it's tough.
Yeah, and we've had our fair share of those. Where we start in one area and then it moves to like for instance, starts in Riverside and then it moves to Fontana, then it moves to Chino, then it moves to Temecula, and it's like, man,
Mhm.
we're going several like an hour in each direction. It's
Yeah.
like that's a long realization process. Because it's really hard to say, hey, I really like this area. Wait, actually, let's go here. It really sets you back in your planning by probably a month or two in some cases, or completely like, derails your planning.
Yeah, and I think that's super important, why it's a good idea to get pre-approved obviously first, and then from there you have to figure out what your budget is. That's another huge thing. Like, you need to
Yeah,
know, like, my absolute max payment is X. And I know properties in this area are all going to be more than that based on my down payment and my criteria. So
yeah,
I'm not even going to look there, because they're not going to be fitting inside of your budget. So
yeah.
okay,
You're priced out.
correct. Yeah, which is
Yeah,
okay. That's normal. That's totally acceptable. But just know that and be like, okay, I'm just gonna look in this area and this area because I can afford this and I really like this area. Okay, that makes it much easier to be like, okay, let me see what we can find. Go shopping for a couple weekends, or 2, 3, 4 weekends, whatever the case is, and then we'll
yeah,
submit some offers based on what we find.
yeah. And like this channel, I actually get a lot of reach outs from people from out of state. Like I was talking to a guy from Idaho the other day,
Hmm.
and he really he heard good things about Corona, and then we were talking about like a bunch of different areas. And it's like, okay, we got a big net. We need to really hone that in.
Yeah,
But like the draw to Corona was he grew up in Orange County and he wanted to get back to family again.
yeah.
Now we're looking Corona, and any further out than that, I notice a lot of people from Orange County that they're just not really happy until there's a couple parts in Riverside that aren't that bad.
Yeah,
But
I
if
know they like Corona. It's still right. I mean, you're going to the freeway and you're, down the 91. You're on the beach cities. You're going to the beach, so it's close as you're gonna get without being in there. Um,
yeah, yeah, so
it's
you pass
definitely.
Green River Road and then you're in Orange County again.
Yep.
But I get a lot of people coming from LA too, and they just once they get out here and kind of start looking, it's like they just have a really, really hard time. Well, that's one of the reasons I started this channel too, is just because I'm trying to create awareness or information, about the Inland Empire, just because I know a lot of our buyers are coming from those areas. But I get a lot. They start in Riverside. They don't like what their money gets them in Riverside. They end up in Moreno Valley
Hmm.
or Beaumont.
Paris. Yeah.
Yeah. Yeah, but
Yeah.
like those are kind of comparable. But when you're going Riverside to Beaumont to Redlands, it's man, it's such a different. All three cities are just so different from each other.
The problem to me with the difference between Riverside and Beaumont is, or even I mean, Moreno Valley and Beaumont, is that you might get a cheaper house in Beaumont, but the taxes are higher, so your payment's
Mhm.
going to be the same.
Yeah.
So you just went out there. Not, I mean, there's some great areas in Beaumont. There's some very nice areas. But your savings isn't going to be typically what you think it is.
No, it's not much cheaper to buy out there.
Mm-mm,
In a way it is, but it's like once you factor in taxes, because most of Moreno Valley until like 2015, probably 2018, the taxes weren't that bad.
mm-hmm.
Now like I think all the new builds are 1.8 and over.
Yeah,
Beaumont, they've been at Beaumont's been at 2% since like 2008.
that's crazy.
Yeah, and that's not every single area. I've seen as high as 2.4 out there. But that affects you a lot. That point 3, 0.4%. I mean, that's probably what, a $400 or $500 a month difference.
Yeah, it can be a ton depending on the purchase price. It makes a big difference. The needle moves pretty easily when you start adding taxes onto a 600,000 plus purchase price.
Yeah, yeah. I was looking at one the other day, and like when I was going through the tax roll on it, they were paying like 20 grand a year in taxes.
Yeah, it's
20,000.
insane.
Yeah, and it's just gonna get more common with the way pricing is.
I mean, if you have a $600,000 property and your tax rate goes up a half percent, that's $3,000 over the course of 12 months. That's 250 bucks a month. That's a
That's it
lot
right
of
there.
money. Yeah.
Yeah, and one thing I know a lot of people, they look at California and they think that everything's so expensive, but Texas, Florida, like they're having a lot of problems right now because their property taxes are so high, and
Man,
people don't realize it. You get a 250,000, $350,000 house, but your property taxes could be up to I think 3% was one of the highest I ever heard of.
I did a transaction for a lady. Excuse me. I did a transaction for a lady. It was probably years ago now. She bought in Texas for, I want to say it was 330,000. The property taxes were over 1,000 a month.
Holy
I
cow!
was like, "Whoa!" And she acted like I was so surprised, and she's like, "What's wrong?" And I'm like, "These are just the taxes are very surprising." She's like, "Well,
Yeah,
why?" And I'm like, "Well, the taxes like out here for this house would be like, it would be I don't know, 5 grand a year, 6 grand a year at most."
yeah.
So I was like, this is insane, but it's yeah, their taxes, they have like kind of that one tax system, so to speak, but the property taxes are nuts. I never seen anything like it.
Yeah, that's wild. Yeah, that makes my head spin thinking about that.
Yeah.
Because out here we're spoiled. Like and now 2% taxes are getting a little bit more normal. But
Hmm.
man, like before a couple years ago, trying to sell that to people, it was like panic inducing.
It was. I have to tell people too, and I've told people in the past, like for a lot of areas in Riverside and Moreno Valley, where there's a low tax rate and no HOA, that's essentially when your payment gets you the most house, because your
Yeah,
payment, part of your, a big chunk of your payment's not going toward either HOA and or taxes. So typically you're going to get the biggest purchase price, for your money with that scenario, which is hard to find. It's getting harder to find too, but it's out there.
yeah, yeah. If you're looking prior to 2000, it's pretty normal.
Hmm.
If you're looking Marina Valley, Riverside, certain areas are going to have HOAs, and there's just no way around it. But once you get outside of that, it's a little bit easier. Like if you want a list of those, let me know. I'll send you what I have.
Hmm.
Um, but it's not as common. I know sometimes if you want like a new build, if you look at like a small developer, sometimes your taxes will be like regular like 1.2%. But
I've
most
been
of the
seeing that.
because you have like these like micro developers where they'll go in and they'll do like 6 or 8 properties or whatever.
Yeah,
As long as they don't have to change anything on the road or add access to anything, they could keep taxes at like 1.2%.
that's pretty cool.
Yeah, it's not common, because usually there's some sort of redevelopment that has to go around the city or
Hmm.
around that particular neighborhood. But I've seen quite a few pop up where they have base taxes.
Yeah, that's interesting. That's really cool though.
Yeah, yeah, definitely a good sales point. But they're going to be usually like right in the middle of an older neighborhood, so it has kind of a funky feel to it.
Yeah, that's the thing. It's like smack dab in the middle of an older area. I mean, there's still newer houses, but I know there's something like that in Colton, I think, or
Yeah, yeah,
something.
Colton does a lot.
Yeah.
I've seen a lot pop up. I don't want to say a lot, but quite a few pop up in Riverside too. I can think about I think 3 developments going right now
Hmm.
where it's just like literally a cul-de-sac, or just at the end of the road they bought up and subdivided the land and popped up 7 or 8 new houses.
It's interesting.
Yeah, if you're an investor watching, you want to do something like that, I have a few resources I could get you in touch with.
Yeah, it'd be cool.
Yeah. But yeah, we're at about the hour mark now. I think we pretty much covered anything. Anything else you can think that we
I think
missed or
that's
that would
it
be
for now.
valuable?
I mean, there's not a ton of movement as of lately. I haven't seen anything super crazy. Um,
Yeah.
but I think that was a good overview of where we're at, and tips for the holidays and things like that. I mean, once we start seeing some more movement, we'll do another update for sure.
Yeah, and I'm thinking with these lives, I'm still trying to figure out the structure I want to do on them. I think like maybe a monthly market update. It's not sexy. It's pretty boring. I think just throwing one out a month is beneficial.
What do all the YouTubers say? If you have any recommendations, put in the comments below.
Is that what it is? I'm trying to be better about the little YouTube isms, but I don't know.
Hit the bell, subscribe.
Yeah, hit that notification bell. Yeah, I do that in my long form. I have my little script, and it's cool. The page is growing, which makes me feel good about like doing all this because it's a lot of freaking work. But
Oh, for sure. Yeah, 100%.
yeah, it's if you guys have recommendations on an editor, man, shoot one my way. I'm getting tired of doing that.
Yeah.
But it's fun for a little bit, and then it's just like, oh my gosh, I still got like 10 more minutes of this video.
Yeah.
Yeah, but anyways, dude, yeah, thanks for being on. If you're watching this, subscribe. We're doing these weekly on Mondays at 6:30. I think I should be able to keep that schedule going for the next couple months.
Yeah.
Thursdays, every Thursday, 6 p.m. is going to my long form video, and I have been hitting a short form video, just a single property vlog with little neighborhood tour and restaurant tour Sunday mornings, and that's keeping me pretty booked on top of my actual job of selling real estate. So if you guys have questions about like any loan programs or if the down payment assistance sounds appealing to you, hit me up. I'll get you in touch with Cody, or his information will be somewhere below. If there's anything I can do for you, reach out anytime, days, evenings, nights, weekends. I'm here to serve and support you on the highest possible level. But I think we covered quite a bit today. So again, thank you guys for watching. Catch you on the next one.
Thanks for watching, guys.
Cool, man. Thanks for hopping on, dude. Means a
Of
lot.
course. No problem.